G'day.
G'day, Gavin. Happy New Year, mate. How are you?
Yeah, very well, very hot, but very good.
Yeah, very hot down in Victoria, isn't it?
Yeah, we're well and truly in the 40s today.
Wow.
Yeah.
Well, it's nice and cool up here on the Gold Coast, mate. So
It's usually the other way
enjoy your
around.
day.
Isn't it? Yeah,
Yeah, very true.
yeah.
Right, mate. Well, let's get into it. The market's started off interesting. We probably should have rallied a lot more than we have,
Yeah.
with a couple of big leads from the Dow, but we seem to be stuck around the 8,700 mark for our index. But a pretty solid day today, with some interesting things to talk about.
Yeah, like the market's sort of not moving around that much, but within the market, there's been some really incredible moves. Like James Hardy jumped up and down, or down and up really hard. MCOR's up again, and Woolies has had a good jump today. So yeah, there's plenty happening within the market, even though on the face of it, it looks pretty quiet, but there's plenty happening within inside it.
Yeah, definitely. Yeah, index has been a bit misleading on the activities actually going on. So you're
Yeah,
right there.
yeah.
Right. Well, let's get into the first one. A bit of a trading idea. You had the idea of selling some calls over BHP.
Yeah, I mean, BHP had a huge jump earlier in the week. It's well outside any of its technical barriers for being a bit overbought. You could easily sell a call. I mean, the 49.50, which is a long way away from where it is at the moment, you 65 cents premium in that. So if you had three or 4,000 shares, you're going to get a couple of $1,000s in the bank on that one. I mean, it fell today, but it's bounced back up again. So that premium might even be better now. I did this stuff earlier this morning, so that premium might even be a bit better now. So I certainly think
Yeah.
it's one that you could look at selling some calls over out to February.
And I think losing your shares at 49.51 is a strike you've got there with the option premium, be looking at a price of north of $50. I think most people would be pretty comfortable selling BHP there with an opportunity to look at buying it in back into it cheaper with a sold put at, something like a $47 level later in the year would probably be a very possible trade to pull off.
Yeah, I mean, you look at its chart over the last 6 months, it's been hovering around that, in and out between 38 and sort of 42 or so. It's only in the last little while. I've got it, if you've hung onto it, got the dividends, it might be a nice trade to certainly get some premium. And if you get exercise, well, easily plenty of other stocks around.
Yeah, very true. Just on the resource sector, you would have seen today Rio have come out and announced they've making or they're in discussions with Glencore about a potential takeover. From the sound of it, it'd be Rio offering its stock up to take out Glencore shareholders. It's interesting if you look at the way Rio's traded over the last sort of probably month and a half. The stock's put on the best part of $25. To me, it looks like the stock's been pumped to prime up the potential of a scrip offer. So interesting, it has fallen pretty heavily today. And I don't think it won't, I think it'll go certainly be something that'll be looked at by our regulators that stock's been pushed at such high levels, and then suddenly there's an announcement about them looking at a scrip offer for a major takeover target. So something definitely to watch on that side of things. But Rio definitely, it looked very, very overdone, as the whole sector has. So something we'll be watching.
Yeah, yeah, that Rio chart sort of makes you think twice when you see an announcement like that after it's run up so hard. Yeah, it makes you sort of look twice, doesn't it?
Yeah, and especially because it was on very small volume. A lot of the move high has been over probably the last 10 or 12 trading days, which generally very light volume. Been watching a couple of 100,000 shares is all that's gone through most days. Generally very small amounts of volume on the screen at any one time. So it has been able to be manipulated a little bit. But anyway, interesting that they've come out with that talk about a bid today, and all that they are in talks with Glencore. So we'll see how that plays out.
Yeah, yeah. The next one there, H.
Yeah, so Suncorp, look, stock we've probably liked for a while. It's I've got a target across the market, or a consensus target of $21.08. The stock at around $17 looks very cheap. Would feel that if you could buy the stock at 17.01 with a sold put there, as you said, getting 43 cents a premium, gets you in there at sort of $16.40 roughly. I think it'd be a very, very attractive price to pick the stock up there. The yield's still not too bad for an insurance stock, and we really haven't. We've really seen a very negative sort of mood for the insurance sector, but I think analysts have still got fairly positive targets. Same with QBE. It's got a target of nearly $23. So I think getting into these stocks at these levels would be attractive for a 6 to 12 month view.
Yeah, I think if you didn't have an insurance company as part of your portfolio, certainly now wouldn't be a bad time in adding it to it. You could certainly switch out of some of the resource stocks that have driven really hard. Even Champion Iron Ore's gone really hard. You could
Yeah.
even look to take some profits in that and switch into something like this for the next 12 months.
Yeah, and I think that's a really good point. That the switch out of some of these what look like very overpriced resource stocks at the moment into stocks where there is decent upside targets, 10 or 15% more upside than where the stocks are currently trading, is definitely something investors should be looking at. I'd like to say switch into the banking sector, but I'm not sure the banking sector's got huge value. I think it's starting to become something worth looking at, but I don't think there's huge value jumping out in the banks right now. But certainly some of these other stocks that we've been following for a while are definitely worth looking at based off their consensus targets.
Yeah, I certainly agree. Next
All
one I've got up there is MCOR. I mean, it was one of our favorites last year. I think if you were trading this stock, you've probably done really well out of it in terms of the dividend yield it's got, as well as the timing on some of the options calls that we made last year.
Yep,
It's sort of still hovering around that 13 mark, or around 12.90 today. You could certainly get into
yep,
it. I mean, there's quite a bit of premium in the options at the moment. I mean, we sold the $13 February put, you're going to get 42 cents for it, which is a really good premium, which means you're getting into it for just over $12.50. It'd be a really good buy. And if you look at the analyst targets there, the average one's about 23% above where it is now. It's a very
yeah,
good stock, and it pays its dividend quarterly as well. So it's a very good stock to have as part of your portfolio. And it's been a very good trading stock for a number of my clients over the last couple of years. So it's one I'd certainly look at again.
yeah. Definitely, I'm pretty bullish on Amcor. I've got targets of over $16. So even just seeing the stock move up to $14.50, $15 at a range, it looks to me like that's something we will see in the next few months. So definitely one to get some exposure to either via the sold puts or as you've got there, just buy the stock outright.
Yeah, it's jumped a couple of percent today. I think there's a few charts on a few of the stocks today as people coming back to the market. They've sort of jumped out of their sort of trading ranges upwards, which is a really good sign for the year ahead for those ones that have struggled a bit in the last couple of years or last year anyway.
Yeah, definitely. And as a Monday, we generally see most of the major institutional investors back in the market. So volume should start to pick up, and it's really where we'll start to see what the direction the market wants to take over, the early part of the year.
Yeah.
We had some CPI numbers out earlier in the week, as I think came in a little bit lower than expected, but I don't think enough to sort of change our view on rates. I think you and I have sort of talked about that a little bit, where we're probably neutral to possibly a rise as the next move.
Yeah, I think neutral to a rise is likely. The economy's going along pretty well, isn't it, really? I mean, the
Yeah,
spending's been up. I think a lot of the analysts were saying that the CPI drop was really a seasonal thing where there was a lot of discounting going on. So I
yeah,
think, I don't think you get too excited by that number just yet, but next one will really play out. But it's a hold or a rise really for the next one.
yeah. That does seem to be what the market's probably pricing in now. I think cuts are definitely done. So something to watch for. I think that's probably sort of things for us to start the year on. Some couple of good ideas there, and we'll sort of get back into our weekly videos starting next Friday.
Yeah,
Hopefully, we'll see a bit more volume back in the market.
yeah, we'll start getting back into it. We'll probably having a bit broader general discussions this year and something a little bit different as we get into the year. So, first one out of the way, and we'll let it evolve over the next little while.
Fantastic, mate. Well,
Right.
good luck for 2026. We'll talk
Yeah,
soon.
see you later. Bye.